Hi, my name is Christina Robinson, and welcome to another edition of CMS Forex News. Today is Friday, December 7th, 2007. Let's start with today's fundamental releases. The Japanese economy grew slower than initially reported for the third quarter. Today's release revised the preliminary figures of 0.6% to 0.4%, pulled down by lower capital spending and domestic demand. Exports remain strong. However, with global growth expected to slow, the Bank of Japan does not have much room to raise interest rates from 0.5%. Output from German industries declined 0.3%, though expectations were for an even bigger fall. The 2.1% increase to capital investment, such as in factory machinery, was not enough to offset the decline of durable goods and energy production. Employers in the U.S. hired more workers than forecasted. 94,000 new jobs were created in November. The data suggests that consumer spending may hold firm and that companies are not cutting workers in anticipation of a recession. The unemployment rate remained at 4.7%. This strong employment report reduces the chance that the Fed will cut rates by 50 basis points in its meeting on December 11th. A 25 basis point cut is more likely. Consumer confidence continued slipping as the UMich Consumer Sentiment Index fell to 74.5 for December, the lowest in 2 years. Consumers are concerned about rising credit costs, the meltdown of the housing market, and higher energy costs. In Canada, employers added 42,600 new jobs, beating economists' forecasts. The gains were led mainly by the private sector after recent months of being dominated in the public sector. The unemployment rate notched up to 5.9% as more job seekers entered the labor force in November. The dollar gained for a third day against the yen as poor Japanese data and strong U.S. jobs data favored the dollar. The pair was up 200 pips since hitting a low for the week near 109.50. It will be the second week of gains for the dollar as investor confidence has returned. Today, the Canadian dollar stemmed its losses from earlier this week to the greenback. The U.S. dollar-Canadian dollar pair peaked near 1.02 after the Bank of Canada cut rates on Tuesday. Yesterday's positive data and today's strong jobs report have given the loonie some strength during the second half of the week. The pound fell this week mainly on Wednesday when the market was already pricing in Thursday's Bank of England rate cut. From the beginning of the week, the pair was down 250 pips. Finally, the New Zealand dollar strengthened for a third straight week as its central bank signaled that rates would remain at record highs as inflation was going to be a problem for the economy in 2008. From the week's open, the Kiwi was up around 140 pips on the U.S. dollar. With two central banks lowering rates this week, it is the Fed's turn next week as they decide on rates on the 11th. And that's it for this week. Thank you for joining us here at CMSFX.com.